Maybe it's Musk's master plan to find more lithium to power more Teslas.
Yeah, because what is he taking, like 127% of the annual?
Well,
think about it.
As more people come into the market and lithium becomes a bigger problem for these EV manufacturers, that's it. Musk has figured it all out.
It's all related. I got to tell you, it's all
to Jupiter. It's
all related.
That's right.
They're all related to each other.
Because if you look at just what they predicted in terms of their production numbers, they're going to take something like 130% of annual lithium production just for Tesla. That doesn't even include all of the other electric vehicle manufacturers. So when you start to really think about that, it makes a lot of sense. Either you're going to be producing a lot less cars, or you're going to have to find more lithium.
All right. Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast with me. I got Don Nitti, venture partner at Social Leverage and Venture Capital Fund, and Clint Sorenson, Chief Investment Officer at Wellshield at OCIO and Investment Research Business. And we have a special guest with us here today. So, Don, why don't you do the honors and introduce this man?
Yeah, in lieu of Nick traveling the European countryside, we've decided to invite Danny Jassy on. Danny is co-founder of a advisory firm, spent many years in the hedge fund world and venture capital world, as well as growth equity investing. Great friend and one of the most brilliant minds that I've spoken to.
Ooh, high praise, man. Well, so Danny, thanks for joining us today, man.
I'm glad this is being recorded.
Well done. I like that. All right, boys. So I got 3 topics for us today. We'll talk about SpaceX, new capital raise. We got Starlink going public, or rumors that Starlink's going public. We'll talk about how true that is. And then ChatGPT is also doing a capital raise, but we probably just need to talk about that. So, all right, let me see if I can't get us queued up here with some thoughts on SpaceX. All right, so check this out. SpaceX is raising $137 billion in the latest funding round. Looks like Andreessen Horowitz is going to lead, right? They're going to be focused on their Starship program, which I can talk about that if you guys are interested. But these guys are good at what they do. They led launches last year, 60 for 60. The last column here is how many blew up, right? Which is good. So SpaceX was 60 for 60, no blow ups. This Chinese company, Long March, is next. The next closest is this Electron, which is Rocket Lab. Came in at 9. So SpaceX got a huge lead on these guys. And here's a little bit about the company. But just look at the price action. This is over the last year. So while everything's in the toilet, right, over the last year, SpaceX is up 28%, right? At least that's through the beginning part of this year. And just to hit on a few last thoughts before I get you guys questions over to you guys. The last primary funding round they did was in June. The secondary market has them up 9%. That'll put them at 139. But like I said, this next round here they're doing in December is for $750 million at a $137 billion valuation. So, all right. So Don, if I'm an investor, I want to buy this stock, right? Like, how do I do it? You're like the OG in secondary market stock buying, right? So how would you go about buying in SpaceX stock?
Well, for one, if you look at the capital raises that have been done in the business, over the past 6-7 years, they were very, very close to the chest on the cap table. So you had certain individuals and groups that were able to be led on the cap table. If any employee of SpaceX ever tried to sell, as they wanted to transition and move to, if it was a Google or Apple or wherever they were going, the company would just instantaneously row for it. I haven't seen change in that.
Hold on, can you explain what a ROFR is? That maybe people may not know what that is.
Right of first refusal. So, when you go into a stock purchase agreement, it goes to the company, depending on the language in company formation docs, but the company will have right of first refusal on it, and then also certain investors with investor rights. If the company opts to not purchase the stock from that individual as an employee, it will then go out to that shareholder base. If they say, hey, we don't want it either, then it's able to transfer onto a new purchaser.
Got it.
So
Got it.
for years, many people have tried, many people have gotten creative. If it was, putting together some wonky structure where an employee would essentially move their SpaceX position into a, trust or special purpose vehicle for tax purposes or whatever they were telling the company at that point, staying on as manager of it, and then an investor coming in and purchasing that vehicle from them. We've kind of seen everything across the map, but, people have tried, most of the funding rounds, individuals have come in through special purpose vehicles or funds that had access to the company.
Yeah, that's what I'm familiar with.
Yeah. So they would come in, become an LP in that entity, and then gain access through that channel.
Okay, so that's what people are doing now. Then it sounds like they're doing like going this SPV route. If you want to get access, you're doing that. If you're just like your everyday man, not a pension fund, endowment foundation, hedge fund, whatever.
Yeah, that seems to be right. And I think, the people, a lot of folks who got in it, 5 or 6 years ago, the market was very active for it. Obviously, the valuation was at the time not sitting at 140 billion. People were doing deals at 15 billion, 13 billion, 20 billion. I feel, given the market environment, a lot of people who are LPs in those entities would probably be maybe a net seller of it. So, are they trying to sell their LP interest in a fund that they invested in 5 years ago to get liquidity of this, right? On paper, that's a pretty good valuation given current market environment. So are you taking some liquidity via that channel, et cetera? So, but, there is a base for it. I mean, it's Elon. What was the stat from last week? I gave us, 100 rounds and never had a down round. So, I think the streak continues in Elon's world, and, people love him. He's been able to execute, and, you're not going to get, we just had a conversation offline about how do you actually comp this business, right? There's really nothing else out there in the public market that would give you exposure to this sector and what they've been able to achieve so far.
That is true. All right, so that kind of
question was, assuming there is a huge illiquidity premium to this, what proportion of the current valuation do you think is linked to that illiquidity premium? If this was freely floated, I mean, I know we can all make up numbers, but just as a thought exercise, is it half? Is it 20%? Like, what's
so Clint?
Where would it shake out?
Clint, what do you think? What do you think? And then just what do you think about SpaceX in general? Like, good investment? Like, good. Give us your opinion.
I mean, when I look at it, the trend's up, and if you think about all the funding rounds that Elon's been involved in, as Don just pointed out, I mean, he trends positive at the end of the day, and there's a tremendous amount of interest. I mean, just within our network, we see the interest. It's been tremendous, right? And so I think at the end of the day, when you think about Starlink and you think about Starshield, right, you think about the fact that SpaceX is, I think, the largest government contractor in the world for the U.S. government. The sky's really the limit on the valuation. You start to factor in Apple making consumer goods as a $2 trillion company, and then you start talking about $139 billion, $137 billion valuation for SpaceX, and they can potentially, through Starlink, provide internet for everyone. And what that opens up from an e-commerce perspective, from an economic perspective, from a alleviation of poverty perspective, eventually from a decentralization perspective, I don't know. It's hard to put a valuation number, but I think it's a lot higher than 137 billion eventually.
Yeah, I guess on top of that, there's the reference to Apple, but does Starlink become a platform where there's like an app store on Starlink?
Oh, listen.
I like that.
I believe
who
it.
knows?
Start taxing folks 30% be in it.
Exactly.
I believe. Well, listen. I mean, it kind of goes to this next topic then, which is like if it's going to go public or not, right? But just a few stats. So, like 1 million customers, $30 billion. This is Musk said there's $30 billion of estimated revenue. He thinks they could go up to $70 billion once all the satellites are launched. Right? It's $110 a month to get one of these things. So it's like, and then it's they've launched 3,300 satellites through 19. That's like 1,000 satellites a year. Their goal is to get to 12,000. So like. But my thing is with this one, boys, it's like half the world's population doesn't have the internet at all today. That's like 2.5 billion people. These guys are going to give it to them. And then to your point, they like literally control access to the internet. So, you could cut it off or you could limit it, or it could be an app store, or whatever you get. Like all of those things can be true, right? So,
have y'all seen one of these things? Like when he launches the satellites, have y'all seen it in like the sky? It's the craziest thing you've ever seen. So I'm pulling up. This is like a year ago, November-ish, December-ish. Pulling up with my family, and I look up, and I literally think I see a UFO. I like freak out. I record it.
Yes, yes,
I've got it on my camera.
I filmed it.
It's massive. I'm like, oh, it's Armageddon. We're done. Yeah. My poor daughter thought there's a UFO, and like you start, Twitter searching, and like everyone within our vicinity has seen this thing, and then it turns out to be SpaceX, Starlink. So
that's incredible.
And I'm sorry, Dane, you said you saw one before. Have you seen it up there?
Yeah, I don't know if it was a Starlight or a Starlink, like what exactly it was, but it was this mysteriously huge meteor thing over the horizon of San Diego, and I'm immediately like looking on Twitter or local news, and I'm like, someone has to be reporting this. I mean, it is comedically huge in the sky, and there was just nothing. And then later it turned out it was some fragment, maybe like pre-COVID a few years ago, but it was pretty wild to see without expecting it. You're just like, they're landing. I guess it's time to break out the good scotch and call it a day because they're getting invaded or something.
That's right. All right, Clint, though, that kind of begs the question, right? Like, this is, first of all, SpaceX is the only company I know that can send rockets up at the price that they're doing it to get 12,000 satellites up into space. I mean, it's like a monopoly. Like, how do you value something? Like, what's the potential?
It's a monopoly, and it's a logistics company, and who knows if they start mining the moon or whatever. Like, I'm not big on the whole Mars thing just due to, a number of reasons. But at the end of the day, you got to be driven by a grand mission. It just so happens that they start to discover rare earth metals on the moon and start mining them and making, the sky is, no pun intended, but the sky is literally the limit, or space is the limit as it relates to this company. And I think there's a lot of hype in that, as well. So you got to be careful too, right? It's not, there's always something that could go wrong. So you got to think about that from a position sizing and a risk management perspective. But at the end of the day, I don't think the valuation's outside of the norm here. And I don't know how to answer Dan's question in terms of what's the illiquidity premium, but I think the fact that access is not readily available to majority retail, it does bode well for that being a significant chunk.
Maybe it's Musk's master plan to find more lithium to power more Teslas.
Yeah, because what is he taking, like 127% of the annual?
Well,
think about it.
As more people come into the market and lithium becomes a bigger problem for these EV manufacturers, that's it. Musk has figured it all out.
It's all related. I got to tell you, it's all
to Jupiter.
It's all related.
That's right.
They're all related to each other.
Because if you look at just what they predicted in terms of their production numbers, they're going to take something like 130% of annual lithium production just for Tesla. That doesn't even include all of the other electric vehicle manufacturers. So when you start to really think about that, it makes a lot of sense. Either you're going to be producing a lot less cars, or you're going to have to find more lithium.
Right. Okay. So Don, this tactically, how would this work though? Right. So I own SpaceX stock, and then let's say it actually spins out. They spin it out, Starlink out, right, into its own company. Like, how does that work if you're in one of these SPVs? Do you get the stock if I want to sell it? Like, walk me through that.
I guess if you're direct to the company, it's just going to be privy on company docs, right? What's the language in there? If you're in a fund, you're going to get the distribution according to the limited partnership agreement.
Okay.
So, the Starlink will get spun out. There will be a liquidity event. I'm assuming that there's going to be a 6-month lockup on it, depending on the way it goes public. And then, the limited partners will get their distribution. The general partner will keep us carry.
Right.
So hold
on. In that scenario you talked about earlier, where like someone comes in and buys a piece of the SPV, right? Like if someone's coming in today and they buy a piece of an SPV that's already out there, then like what does that look like? That other GPs got to send it through to the next fund, or what's that?
Well, that's why you have really good lawyers. One, two. I mean, it could get complicated, and you saw a lot of deals go up like this forever. First it started with Uber because Travis put crazy restrictions on any employees or any investors trying to get liquidity in the secondary market. So a lot of folks did these wonky structures, being, a forward contract. It's basically a promissory note saying we're going to pay you this price and time. When we don't technically own it, we're going to have a bunch of legal documentation that says we do own it. But when the liquidity event happens, you're just arbing the spread. So if you pay $10 a share from employee one and it goes public at 30, you're making the $20.
Okay, it's like a forward contract almost.
It is a forward contract, but if employee number one goes missing and took his talents to Central America, you could have some problems trying to locate him. And obviously lawyers do a good job at this, but even with this structure where people have done a bunch of go-arounds to gain access to SpaceX forever, that always becomes my fear, because as you raise a fund to invest in these, you're the fiduciary of somebody else's capital. Mm-hmm. So you obviously are protecting those LPs, but you don't really know at the other end of the spectrum what lengths that person is willing to go, or what essentially have they done? Are they legally compliant with the way that they've processed it? Does the company find out along the way and say, guess what? You did this structure. We're buying back your stock. That's it. See you later. And, the LPs on the other side of it are,
out of luck.
Shit out of luck. So,
yeah. But listen, this is like one of these things, like when I look at the secondary market, the whole thing is rife with, I'll call it risks like this. So it's, I think it's an interesting asset
There's been
class.
lack of enforcement.
Yes.
A lot of points of
well,
view.
you just gotta know what you're buying, right? You gotta know what you're buying. So it's all a function of your price that you're getting and what risk you're willing to accept from your counterparty, right? I think that's the right. What do you think, Don?
Yeah,
that seems fair.
I mean, I've never done a structure like this. All of it was a board straight through. It's direct to the company, or being company-led secondary or primary round. Mm-hmm, mm-hmm. But there's definitely counterparty risk. I think, and I don't know if I was having the conversation with you earlier, Danny, but, years ago, people thought less about the risk when they were doing it because, the market was hockey stick. It was up and to the right. You had a good sense of, you have two conversations with bankers and they're going to tell you that they're going to file an S1 in, 2 months, 2 weeks, 3 months, whatever it is. Now with, the market, doing what it's done and, multiples re-rating, what's the valuation? Like some of the prices that were paid in the secondary market for these businesses are totally asinine. You've seen it in early stage venture also, right? Mm-hmm. Pre-seed going up at a $55 million valuation. So before, when everyone's making money, nobody really cares. Now the problem's going to be you're going to get a group of dentists out of Oklahoma who are like, we put $3 million in this SPV and paid, $60 and it's going public at 12. Like, what happened here? Right. Yeah. So I think you're going to start seeing, as capital markets do open up, which, hopefully happens, you'll see some good companies, hopefully go out by the end of this calendar year, it's TBD,
Yeah. Yeah, it'd be interesting. I just the piece that always resonates with me is counterparty risk, and I just don't think a lot of folks think about that. You certainly don't think about it in the public markets, right? You just open up your brokerage account, you let it rip. I think in the secondary market, it's a huge, you really got to rely on whoever you're investing with, like your GP for the fund that you're investing into. That you have to make sure that they're doing the right thing and kind of managing that risk properly.
It's funny too. For years, everyone. It was like NASDAQ private markets first is like, we're going to build an exchange like the NASDAQ where you could just transfer and trade, secondary market interest in all these pre-IPO companies. Mm-hmm. And nobody's really successfully done it. No. Because there is so much paperwork and moving parts and structure behind it that it's like, I almost think it's borderline impossible. You're seeing people build some facets of it. What Nick does is very interesting just on the data side, but when the brokerage side of it, I feel like it's impossible.
Yeah, there's a lot of opportunity out there. I mean, even the pricing, if you go and you get offers from different brokers, I mean, on average, I see it's 25% wide on just the offers, right? And that's the average, right? So that means some are higher, some are lower. So it's just, I can't tell you how many times to get calls from people. They're like, hey, I got some SpaceX stock. You got 24 hours to make a trade. It's like, I got a buddy in Brooklyn wants to let her rip, you know?
Danny and I have had many conversations about this, and he's a big whiskey collector, but it's like we always talk about what's the clearing price. And it's like whiskey and watches and everything else. You know, people think that their Rolex Daytona is worth 32 grand when the clearing price is really 23. So
right. Yeah. I love it.
I mean, I guess we're deviating from our show notes here, fellas, but yeah, I'm very interested in how or if Carta X or AngelList, can solve these problems, because it is seemingly a huge opportunity, and they both, those two companies in specific have strengths and weaknesses there, but we're all waiting for it.
We'll see. Okay, so Danny, so while you're rolling, buddy, ChatGPT.
Yeah.
Okay.
Yeah.
No, nobody knows what it is. Okay. AI, it's like this. People hear about AI, and I think I don't think anybody really knows what it is unless you're like a developer and you're like, building these things. But then all of a sudden ChatGPT shows up and boom, just like that. I think everyone got a hard slap of reality that this is here. Like AI is here. I think we're seeing it in a lot of products that we all use every day. Right. But man, you explain this to us. Right. So just to like set the tone here, ChatGPT, $29 billion valuation. I'm hearing Microsoft is going to do $10 billion into these guys. And they got this wild deal where they're going to get 75% share of their profits till they get their money back. I'm hearing that they're using, I don't know if this is true or not, but I hear they're using Microsoft Azure, the cloud computing technology.
I'm sure.
Right?
I'm sure that
they're using that, and it's like $3 million a day. So it's almost like it's coming right from. They're investing it in, and it's coming right back through. Right? It's like self-dealing. Right. I don't know. Is that self-dealing? But explain what ChatGPT
what
is.
LSE did. So look, this is great. I love this subject because the best way to get engagement online or on a podcast is to say something that sounds like optically sort of true, but is technically incorrect. And that's going to be this explanation of ChatGPT. So we'll have people coming in and being like, that is wrong. That is not how it works. So we'll see if that risk goes. My understanding of what ChatGPT is it's a large language model, basically. And I guess the most layman explanation, and, chime in the comments if this is not correct, is that most computational relationships are linear. So even when people talk about AI and ML, it's like, here's some start point, here's some end point. You can train some data, and there's some causal relationship between those things. And we'll do all these, math behind it, and hopefully come up with something that's useful for new data that comes in. But this works differently, and you're going to have to Google the specifics because I don't know. But what I do know is that it's pretty mind-blowing if you use it. If you go into OpenAI's Playground, you can prompt it to, write a menu for a bougie restaurant in New York. You can write your kids' homework, as you mentioned, Dillon.
I did that yesterday.
Excuse me.
My daughter. Hopefully she gets an A. Hopefully she gets an A.
It's actually pretty insane. Like I've put prompts in there, like explain factor investing, and it comes up with stuff that's like fairly regurgitated sounding, but it is close enough to being like better than a search engine. So there's speculation that this will destroy Google, and I don't believe that for half of a second. But you can also very clearly, infer why Microsoft's interested, because it does plug in well to Outlook, to Word, Excel, whatever, whatever it is. So talk about clear use cases.
What does that mean? Like it plugs into like everybody in like a Fortune 500 company in the United States is using Outlook, right? At their company. How does ChatGPT, does it write the email for you? Does it respond automatically?
Yeah, sure. Yeah, good.
Hey, Clint, you're on mute, brother. You're on mute, man. Hit us.
No, you can write code on it. Like with the GPT-3 is more specific to writing code, but you can ask it to draft Python code, and it'll draft Python code for you on ChatGPT.
Oh, man. Yeah, okay,
it's extremely crazy. Like I, with my limited programming experience, can go in and be like, hey, make me something that does this using kind of these, I've got these variables I need to do something with, and export it in Python, whatever. And it'll just spit out a code block that looks close enough to working, but.
That's wild. I mean, all right. So Don, what do you think about ChatGPT, OpenAI as like an investment thesis? Like, do you invest
I
into
got
these?
one more. I had this.
Go ahead.
I had this other point here, which was the structure. And I'm reading from a blog, which I'll shout out just to give the guy credit. I don't know him. It's the first time I've ever seen his blog. It's out on Twitter. It's the Neuron Daily. I don't know if I should or shouldn't be doing that, but just credit where it's due. He summarized the bullet points. It's important. The first close partners get 100% of profits until their investment's paid back. Then Microsoft starts taking 75% of profits, and the other 25% go to the first close partners subject to a profit cap. And then 49% of profits go to Microsoft for its profit cap, 41% to employees, 8% to the first close partners, 2% to OpenAI. And then after something like $100 billion of this is paid off, then all of the equity is returned to OpenAI. So if you kind of just add this up and you go, well, how do you get to $100 billion of, they say profit, but EBITDA or net income, whatever they're using, it's like, what does that actually mean? Because now I'm looking and it says that Amazon's EBITDA
these guys were
50 billion.
But these guys were nonprofit, right? OpenAI was a nonprofit. That was my understanding. Do you guys know about this?
Yeah, they're going from nonprofit to profit back to nonprofit.
Sure.
Which, yeah, exactly. So just to put this in perspective, Microsoft's last 12 months EBITDA is around 100 billion, Apple around 130, Amazon around.
So it's like a $1 trillion $1 trillion company before it goes
right. So
back
that's
to
ultimately
nonprofit.
what the bet is that these three global dominant monopolies that touch hundreds of billions of people, collectively and cumulatively, that's like the size that we're predicting in order for the total waterfall of payoffs to eventually revert back to OpenAI.
Yeah. Okay.
I was meeting with college last week, actually, guys, about ChatGPT, talking with a business school professor. And I was like, how are you guys going to, deal with this? He's like, oh, no, we're going to teach people how to use it. So he was
really?
He was like, we're going to teach people how to use it. We got deep into kind of what his expectations were because they use it a lot in the school. And it was fascinating. When you start to think about all the applications from a code perspective, and you start to think about like what it could potentially do, the potential of something like this. Obviously, it's going to take gargantuan amount of data, right. To continue to improve. But that's what it's doing when it opens up and you get 1 million users in 3 days, right? It's just gathering all this data and continue to gather, just getting better and better. So I imagine we'll do that on the code front too when GPT-3 becomes more mainstream. And this is big. I mean, this is big. Think about chat bots. Think about all websites, e-commerce sites. Think about follow-ups where you're calling or writing an email and you're saying, hey, you left something in your cart. Don't forget to check out. We'll give you 10% if you close it. Like, it's going to really change a lot in regards to, closing on commerce in terms of, creation of content, creation of code, creation of applications. I mean, I don't think we really fully understand how exponential, if this thing gets fully baked, how it could really change the landscape of almost everything.
I got a good one. I got a good one for you. So I saw this guy on Twitter. I can't remember his name. If I find it, I'll send it to you guys. But he has this company. He's a lawyer. He has a company that will call like T-Mobile or Verizon or utility company, like negotiate your bill for you, right?
Oh, it's the do not pay guys, right?
Yeah, that's it. That's the guy. That's the guy. So this guy connected ChatGPT and created a solution that ChatGPT does it for you. He like connected it into some voice AI and it will just call like Verizon and it will negotiate a reduction in cost in your bill all by itself. But there's a human on the other end. It doesn't know the difference.
Well, like, to your point, you were asking me, I think you're going to ask, is this investable and how?
Yeah.
I mean, it's going to be a platform, right? So if you look at Amazon, or Meta or Apple, venture funds will look at this thematic approach and say, who's a really good team? Who's building what on top of this? So, even with the business, like, Thrasio is probably a good example, right?
I was just about to say, is this going to be another Thrasio type thing?
Well, everyone was just going out and saying, hey, we can acquire these Amazon resellers at, 3 times EBITDA, and we'll throw some, technology layer on top of it and make it more efficient. Then it's this economy at scale. And then what happened with Thrasio was, Danny had conversation about this, but they just used a bunch of third-party tech people to, and said they were a tech play. But, at the end of the day, then everything got more expensive. So you had all these new incumbents come in the market. So they began to get priced out of, they were paying 3 times EBITDA. Now they're paying 5 times. And then you had a bunch of middle market private equity guys say, shit, we can do this too. Like they start paying up 6 times or 7 times. And then the model eventually doesn't work. But they're platforms that you could build on top of, being Amazon and obviously Facebook and whatnot.
Okay, but Don,
I think that you're going to obviously see people take a swing.
Do you do the pure play though? Do you do the pure play AI, like the open AIs, or do you just say do you just acknowledge? Like I was looking at Canva today. Okay, like the last 3 or 4 products they launched were all like AI based, text to image. They just came out with this thing today. I did like a webinar on it. It's like Canva Docs, and they integrated in this thing called Magic Write, which it might be ChatGPT on the other side of that thing, right? Because it like literally writes the copy, first draft of the copy for you, right? They called it Magic Write. So do you buy Canva just knowing that that's kind of like turning into an AI, graphic design plus AI shop, or do you do the pure play? I can't imagine a pure play going public. So like somebody picks that up, a Google buys it, a Facebook buys it, right? I mean, what do you think?
I mean, it's difficult. I feel like it's a difficult question to answer on the sense of, as you begin, like someone like Canva, for example, you look at that business and you say, do you deploy dollars here or do you go after, but like, what's the moat in a pure play? Like, what's the valuation you're paying? What's the real exit outcome, right? When you look at some of these businesses, at the end of the day, a lot of it comes down to valuation, what you're willing to pay, like what's the multiple on these actually going to look like when the dust settles out, and how many are still. I mean, someone's gonna is it going to be Adobe that comes in and just starts going on an acquisition spree in this space, right? I mean, you're going to see consolidate.
This is a classic know the game you're playing question, because it's like, you go back in time and you ask what browser and you bet on Netscape, like you probably made a lot of money, or also you probably made 0. Just depends on exactly when and how you made that decision, right? So this is, I can guarantee, will be a similar type of situation. Like I generally think, as sort of what has impact in investing, you want to go with companies that can be category defining leaders. And oftentimes by the point that it is made aware to me, it's like already worth, however many billions, and getting huge deals with Microsoft done. But nevertheless, that seems like a sensible way to capture some value in the space. But there's going to be so many companies, like back to the know which game you're playing, like there could be a small app that just does scheduling. Like there's a lot of healthcare scheduling things that are annoying. Like you just go get a regular physical, nothing's wrong with you, and your GP's like, oh, go get blood work done, and you go down to LabCorp or something. It's like, why should I even have to waste my time figuring that out? I should just press one button on my phone, syncs to my calendar, and like just says, no choice. It's like, you're going at this time, and I'm like, great. I'll get in my Robo Tesla and it'll drive me there. Like that, and that type of app, could easily be worth something, right? Like maybe whatever. And then there's these kind of like bigger existential sci-fi type things where it's like, well, what if someone invents Westworld? Because like really, if you've ever played a video game, it's fake reality, and the only thing separating like real Westworld from a video game is just the amount of compute that you can throw at it to create the immersive experience. And it's like, sure, maybe that's a big outcome also. So it's going to be hard to pick like which specific company. Just being aware that these new things will be interesting and fun is probably, there's enough intellectual curiosity there to be excited about it,
Right.
I got a question. Sorry, and I was just saying,
go ahead.
I mean, how do they monetize this without degrading the whole point, which is to get users and data to become a better, smarter engine, right? Like, how do you actually monetize this? It's going to have to be like the boiling the frog scenario over time, and I think that opens up a lot of competitive applications and opportunities for competitors to slip in. So I think they had the right idea at first, was be nonprofit, true open source. Get as much data as humanly possible, probably allow for decentralization at some point so that the owners actually own their data, or the content creators actually own their data. But going the Microsoft route means that they're most likely, this is my guess, going to try to monetize enterprise relationships. which may be the path, but what does that do to their ultimate goal and purpose of
it's true.
Becoming the smartest engine?
Yeah, that's a good point. Well, listen, I tell you what, let's end it there, boys. But I will say this. We talked metaverse and photorealistic avatars is a whole new platform last week. We talked about space being a whole new platform and Starlink being a platform gatekeeper to half the world's population with the internet. And now we have AI, right? So that's kind of the whole point of this whole pod is there's all these like emerging technologies. This stuff is going to disrupt incumbents. I think it's all coming fast. Like, this is 5 to 10 year out stuff. This isn't like some fairy tale that may happen in 20, 30, 40 years, like this is coming down the pipe. Like you gotta be thinking about this stuff as an investor, right?
For sure.
So, okay. Sounds good. Gentlemen, appreciate your time. I will see you all next week. Danny, thanks for being here, man.
Great times.